Welcome to Wall Street Confidential. I'm Aaron Task, joined with Jim Cramer. And Jim, another round of deals hitting the market this morning. And again, similar to last Monday, none of the blockbuster kind of deals that gets the public excited, and the market's drifting a little bit lower here. Is that just selling off after big gains last week?
I'm going to focus on Longview Fiber for a second. Now, this is the one that is least heralded. It's a $1 billion deal, $1.5 billion. The company fits exactly the pattern of what's happening here. You've got a company that's sleepy, that missed the quarter a couple of times, yielded 4%, owned timber, had gotten out of the mill business. This is one of those companies that, because it is not having up numbers, therefore has no valuation whatsoever. Now, if you're running that company, you just basically say, look, we can't take it anymore. Right. Now, the analysts who followed it, and there were only two, again, this is very typical of what we're seeing, the analysts who followed it, frankly, hated it and felt that there couldn't be a bidder. That, again, is in keeping with what Wall Street does, which is say, look, it has down earnings, we're not interested. I'm focusing on this because there's probably maybe 1,000 companies that look like Longview Fiber.
Right, I was going to say that's almost a double-edged sword where you say if the company's doing badly, that's good because they're going to get bought out. If they're doing well, of course, that's good because they're doing well.
Well, this comes to the point of view where I say that probably 2/3 of the stock market is dramatically undervalued. Now, my friend Aaron Burnett was saying on TV today that the only unqualified bull out there is Jim Cramer. And I am unqualifiedly bullish, in part because the companies with great growth take care of themselves. That was last week's market. The companies without the great growth get bought. When you see IFIN get a bid and Longview Fiber get a bid, Triad, which again was another company that had questionable earnings, get a bid, Lear, obviously totally questionable earnings. These are all companies that come under the rubric of left for dead that weren't dead. And I think it's very important for people to focus on the idea that you can win two ways.
All right, so if you're the only unqualified bull out there, the corollary to that is that this is as good as it gets. And those terms were actually used in the Journal today in a story about the market. You know, the Dow Transport's now confirming the Dow theory. The Russell 2000 is at an all-time high, and people are saying this is as good as it gets. What's your response to that?
See, I think that the as good as it gets argument is something that I have heard since unremittingly since 1981. There's been only one period where it was as good as it gets, and that was the March period of 2000. And that was a huge setback. But I think we've been living in the shadow of that period now for 6 years. And the problem with that is that the good as it get argument will always be prevalent whenever it's good. Try to think of a situation where it's good and you wouldn't be able to argue that. So I guess it comes under the category of the chestnut that is so easy to keep people out that it's almost like I was writing today on Real Money, the vast national conspiracy to convince people that there is never any time to get in, other than when it's down dramatically. Now, when it's down dramatically, they say that it's obviously going much lower. So therefore, the odds are really stacked against people getting in. The idea that people should get in is where I start from as opposed to where I finish.
Right, but what do you think it's going to take to get the public really interested and excited about the market? Because still, again, Dow's an all-time high, Russell's an all-time high. People just don't, at Super Bowl parties yesterday,
right?
I'm sure people are asking you about stocks, but no one's talking about the stock
No,
market.
But that's fine. It tells me that you need to have a couple of years of really good numbers versus real estate, which has still been where a lot of value is locked in. Like people who want to ring the register haven't been able to ring the register in real estate in great numbers. I would emphasize this, that there is a perception among the public created largely by the media that it's just not worth getting into. The media will eventually change, and then the public will change.
And that's probably the point where you start to get worried. Or you think that we're getting closer to the end.
I think it takes a couple years for the public to get in. So you've got maybe a 4 or 5 year period that I'm talking about where it should be pretty good.
All right, Jim. Thanks very much.
Thank you.
I'm Aaron Task. Stay tuned for more of TheStreet.com TV.